Welcome to Student Saturday, where my student, Judo King, is going to be teaching us what he has learned on the technical Tuesdays and Thursdays. And we're also here with guest host, Isaac.
What's up? What is
you
up?
Already know.
Let's get straight into this, guys.
You already know.
Man.
Judo about putting that work. You about to cook up. You get me?
Yes, sir.
Cook up them charts.
Aprende. Aprende.
So essentially, we reviewed gold,
Yep.
right? And we talked about how gold is going to hit the highest price it's ever been at, right? Is about to hit that price. And why we want to continue buying gold instead of selling gold, because we understand the reasonings behind it, where we understand that the US dollar is losing value and gold is going to be gaining value, right? The only thing that would cause me to believe that gold might go down a little bit is because people, right, that have held on to gold their whole lifetime see that gold is at the highest value ever and just sell it. But that just gives us buyers new opportunity to buy it and to capitalize on the further movement it's going to have in its bullish reign. So essentially, with me saying that, what is your biggest concern, right, with buying at the top?
My big concern is, okay, it's a good question, because this is the highest that we have been.
Yeah.
So, like we see this and this, I don't know the date here, but it tried like to get this high, but it fell, it went down. Then it's trying to reach again to this level. But if we buy here, we don't know, we can't buy right now because we have to see how it reacts when it gets here. So, like we said, we have
Resistance.
this resistance right here, and we have right here with this one too. Boom. And it's reacting, if you see, it's getting some reaction from there. So
Yeah.
I wouldn't buy there, so I wait to see, okay, if it break this high right here, boom, I'll wait to retest that, and then I'll buy from there. Or if it doesn't go up, then I wait to retracement to here and then buy there. But I wouldn't buy that high
Okay.
because I don't know where it's going to be.
So that's your biggest concern. That's why you wouldn't buy.
Exactly, yeah.
Gotcha. And that's very valid, because you want to buy at an area where price is clearly going to go up.
Mm-hmm.
Right there, price is not clear.
It's not
right?
clear.
Yeah.
Based off the economic data that we have of us understanding that if the US dollar loses value, gold gains value, right? It gives us an idea that yes, gold is going to continue to go up, but where can we perfectly position ourselves, if that makes sense? Because we're trading CFD, contract for difference. So when you are buying gold, like physical gold, if you buy 1 ounce of gold, you could hold it forever and eventually it'll go up. But when you're buying a CFD, if you buy it, you get charged swap fees every day you're holding it. So you want to buy at the best possible price.
Yeah.
And now I understand your concern. With that being said, Isaac, since his concern is buying all the way at the top, right? And he's waiting for the market to have a retracement where that resistance is, where there's going to be new support, where there's 2 little black dots.
Yes.
What would you recommend, or what would you say about that approach to the market, since you love trading gold?
In my opinion, Judo, what you just said is
And
it's valid, but it's valid.
You
overall.
could press on where it says close real quick. All right. And right here, you could draw your opinion on it.
Oh yeah, it's all good.
Yeah.
Yeah.
Okay.
So right here, price tops, the zone, no support, and then circle. Judo said earlier, all-time highs did get broken right here. But you also gotta keep this in mind as well, because
Yeah.
these highs got broken as well. But it wasn't all-time highs like it was over here. And then,
You have to speak into the mic.
Yeah,
I think
I
it's
know.
best if you draw it out and then you talk
okay,
about
yeah,
it.
yeah. I'm gonna draw it out, guys. My bad.
Yeah, go ahead. Go ahead.
So I'm gonna show you guys right now two scenarios, kind of like the two scenarios that Judo showed, but the two scenarios I'd see from my perspective as well, which is similar to what Judo showed.
Mm-hmm.
So we're gonna take bars. We'll wait for gold to break the high that I drew out previously over here. As you guys see, I drew out this high. I'll wait for gold to break that over here, retrace, and then right here, we'll take these buys right here, correct? Now let's say, guys, if the buys don't happen, what would we do from a seller's perspective now? From a seller's perspective, what I would do is I would wait for this. Gold pulls down here, pulls back up, and then it breaks down, creating a double top formation on the forward time frame. That would be my other perspective from a seller's perspective overall.
What makes you think that it would do the double top?
The only reason why I believe gold could do the double top possibly is only because of the fact that since it created this all-time high over here, and since it has this this other high over here, this is basically, in my opinion, I would like to call it liquidity being swept out of the market. So if this is being swept out, and you know liquidity has been swept out here, but this could reject, and it could for sure reject and then sweep out liquidity over here on this side, causing gold to break, break structure. And not just that, gold is at an all-time high, and that's something to keep in mind as well, because since gold is in an all-time high, we're gonna, for sure, we're gonna see a big breakout happen. We just don't know when it's gonna happen, but the move is gonna eventually happen. When that breakout happens, it could be, the double top formation, possibly.
I think because gold is at an all-time high, that it will break to a new higher high and then have consolidation to then come back down.
Yeah.
And here's why. If you pass me this, right? If we look, right? Check this out, Judo King. If we look at this area right here, previously that was the highest area that gold ever got to.
Correct.
Then gold came back down for a retracement to get to the highest point it's ever got to. And then it came back down for the consolidation, all this stuff here, right? What makes us think the same thing won't happen here with better higher highs and higher lows, like cleaner higher highs and higher lows? Make sense?
Yep.
Yes.
Yep.
So with that, I'm gonna basically erase everything here, and I'm gonna pass it right back on to you, Judo King. My second question for you is, we understand that gold is going upwards, right? We understand what could happen if it goes up, what could happen if it goes down, right? And we understand the economic effect of this, right? Over the last month, gold has just been going up. Over the last week, gold has been going up. Over the last day, gold has been going up. It seems like every single time frame, gold is going up, right? When gold goes up, right, and the US dollar drops in value, what causes this ripple effect throughout the US currency? What causes the ripple effect?
I don't understand the question.
You don't understand the question. When gold gains value, the US dollar loses value. So what happens to every other pair that's going against the US dollar?
Goes up.
It goes up.
So when we look at other pairs like US dollar against the Japanese yen,
The Japanese gonna go up.
Yes.
practically it might go up. Because there's some currencies that are still weaker than the dollar. So you're going to see that the dollar is going to go up on them and the dollar's still going down with gold, right? But there's some pairs that are stronger than the dollar. So those are the pairs that we want to look at, because that's going to give us more trading abilities, or more, not trading abilities, but more trading probabilities or setups that we could use to discover if gold's going to continue to go up. Something that I used to do, and I'm going to teach this on the next class, something that I used to do a lot before I came to the final conclusion of which strategy works best for me, is I would see what 5 different stocks would do to see what US 30 was going to end up doing. If out of those 5 stocks, 4 were successful, then I would buy US 30. If out of those 5 stocks, 4 were going downwards, then I would sell US 30.
I have a question for that. Does US 30 works the same with the US dollar? Like if that shit goes down, that affects, or nothing affects?
It doesn't really affect it because US 30, if we bring it up here, we're going to go to US 30 right here. If we see US 30 is at 40,000. It's almost at the highest price. It's about to be at the highest price
about
ever,
to be, yeah.
right? Just like gold. So US 30 is stocks, right?
Doesn't-
Just because the value of the dollar goes down doesn't mean that the value of the stock goes down. You get me? Because the stock is a company.
So it doesn't have to do nothing with that.
Nope.
Yeah.
You get me? Because if the dollar dies, does Amazon die? No, because people are still purchasing it with euros. You get me? And something that's really interesting is that have you guys seen that more and more websites are accepting cryptocurrency as a
Yes.
form of payment?
Yes.
Yep.
So if the dollar dies, you could still pay with other forms of payment.
Yeah.
You get me? With that being said, we understand that that the U.S. dollar does not affect U.S. 30, right? We understand that the U.S. dollar is going to potentially continue to crash because they keep printing more of it, so gold's going to go up. And if gold goes up, that means that other pairs that are going against the U.S. dollar are also going to go up, so they give us a better idea if we should buy or sell gold depending on how they do. And then from that perspective, all we have to do is figure out our risk when entering the trade, and that's very simplistic, just simple math. Do you have any other questions?
No, I'm good. I'm good.
You, Isaac?
I mean, can we talk about here about entries, or that's for another video?
No, we spoke about them,
Well-
essentially. When we go back here to gold, we spoke about where we would enter.
No, but I'm talking about like the actual entries, like what you're looking for to enter when it gets to that level.
Yeah. So
One thing,
I'll let you draw it.
Yeah.
Maybe that will be better.
Judah, one thing to keep in mind that going back to what Lewis said about US 30, like how you talk about the 5 stocks that he looks at, that's 5 stocks. But also keep in mind, I don't trade US 30, but I do know US 30 is the top 30 stocks of the USA. So that's something to keep in mind, because there's other stocks as well. But I don't know which are the personal top 5 stocks for US 30, but you probably know because you traded.
Yeah, the 5 stocks are the 5 stocks within US 30.
Okay. Yeah.
So S&P 500 is 500 stocks, right? Do all 500 stocks really move the indice?
No.
No.
It's controlled by about 20 to 30 of them that are the big players in the game. US 30 is controlled by around 5 to 8 of them that are the big players. Yeah. But you could go ahead and describe your entry point and all of that stuff.
Which one is this? Gold? Okay.
Gold, yeah. What we were reviewing.
So like I said, I will wait. So we have this. This one. So like I said, I will wait. For me, the best setup is to react this, to have some rejection from there,
Yeah.
go here. But this is the question that I have. Like, I know I'm gonna buy here,
Yeah.
but what confirmations do I need to buy here?
If it doesn't break the support.
Yeah.
If it breaks the support, don't buy.
Don't buy.
Yeah, we sell.
100%.
Okay.
But if it does not break that support, we buy. And what do we lose?
And not just
20
that.
points?
And not just that. And
That's
something to
it.
keep in mind is if you do buy from there, and say even if you don't buy, if that candle fills in that high that was broken, that would be considered like a fair value gap. So
This one right here.
Yeah, like if that breaks that whole candle right there.
It already broke it.
Well, when I say like to the upside, like if that were to break to the upside and then fill in the previous candle,
Yeah.
then it would be considered as like a fair value gap as an extra validation to hopping for those buys.
That was my question.
Yeah.
Yeah.
That was my question.
Yeah. So it's still another opportunity to hop in if you didn't hop in the beginning.
Right now, what I'm gonna do is wait.
Just wait.
Yeah, you could wait it out as well. You could always wait it out.
Just wait.
Yeah.
Yeah.
That's what I'll do right now with gold as well. I wouldn't want to hop in for buys just yet. Just because if it rejects, then we'll wait for it to go to that
To hit
support.
that support.
And if from the support, we'll figure out from there, okay, like, if it breaks below, then we're not looking at buys anymore. If it doesn't break below and it rejects right there, then we're looking at buys all day, for sure.
Yeah.
Do you guys enter like to buy? Like you enter as soon as it get there, or you wait for
Wait
some,
for a rejection.
Okay.
Wait for some rejection or like a wick. Wait for like a wick to be created from the bottom side, and then if the wick is created and then the candle starts covering the body going up, enter for the buys. Or you can be slick and have the confidence to catch it by the wick. But it depends on the type of trader you are.
Yeah.
I wait for confirmation. The confirmation is that it held support and it's starting to go back up.
Yeah.
So it's like
So you don't enter right there. You
I don't
wait to
enter.
go.
No.
You could wait. You could wait it out.
I close out real quick. Press close. What I wait for, if we were to draw it here, I wait for this. Pretend that's the support. Let's say that the market broke past. The market will have this type of stuff right here.
Yeah. And
I wait
reject.
for confirmation.
That would be like the rejection.
This is the confirmation, right?
Yeah, I wait for confirmation. You get me? I wait to see if the market has enough strength to break past. And when I wait for that confirmation, the worst thing that could happen is me losing 10, 20 points.
Yeah.
Because when we look at where the support's going to be and we draw it out, right, we know that right in this area, this is the 4 hour, right in this area, right, is where typically the resistance is at, right? I would enter long position. I would enter right at this area, risk about 15 points with the potential to gain about 50.
Okay, question about that. About the stop loss. Do you look, when you put it, do you look at like where you're going to put and where you're going to put it, you just put 20 points and that's it?
No. I'm putting 15 points, which in reality, I should be putting 10 points because I don't even want to risk 15 points. I'm risking 10 points for this reason. If it breaks down, I'm going to lose. I'm not going to wait for it to then come back up. Yeah. No, I'm going to lose. Okay. But I'm losing 10 points. So that means that I could have 5 other setups like this, but if I win one of them, I could lose 5 times, win 1 time and break even.
Yeah.
That's risk management. You get me? But most traders don't understand that. Most traders just want to go for the big move or hold the trade and do all this other foolish stuff. I don't do any of that. I know that if it breaks the support, I'm going to lose. I'm going to lose 10 points. You get me? And I'll just wait for the next perfect strategy or the next perfect setup, and that's it.
Yeah.
Make sense?
Yeah, makes sense.
Do you have any other questions?
No.
So that concludes a Student Saturday. With all of that, guys, comment down below what you guys want King Judo over here to teach you guys how to do, or what you guys want to see him learn next to reteach to you guys. The biggest reason I have him teaching is because unless you could teach something, you have not properly learned it.
Yeah.
But yeah, I hope you guys have an amazing weekend since it's Student Saturday, and I will see you guys on to the next video.